So if I was starting over as a new real estate investor on day one, here's how I would organize my finances. So first is to set up a business-specific bank and credit card. So I see this all the time. It's one of the most common mistakes I see with new investors is they're using their personal account to pay for business transactions because maybe they haven't set up that business bank account. It's certainly not something that should be on the back burner. It's so crucial to have your business and personal expenses separated. So I would say that's number one. Second, I would say if you plan to treat your portfolio like a business and you plan to scale, then I would invest in a QuickBooks subscription right from day one and use the business field to separate the different entities and the class field to separate different properties. And this might seem like overkill in the beginning when you just have one property, but it will save you so much time down the road to have things set up for a bigger portfolio. That way, as you grow, your financial system is already in place. Third, I would say automate everything that you can. So have rent deposits, recurring, make sure you're putting bills on auto pay. You certainly don't need to be paying every single invoice yourself. You want to be freeing up all that brain space that you can to focus on things like strategy. Fourth, get in the habit of reviewing your financial statements every single month. Even if you have one property, it's so helpful to be looking at your numbers every month so that you can catch issues early and address them timely. You can see any mistakes that you're making along the way and use that to learn and do better for your next investment. It's great to build the habit of reviewing your financials every single month. So as your portfolio grows, you're already in the habit of doing this. And as you get busier, you already understand how much value it provides to be looking at your financials. So last, I would say once you're ready to outsource your bookkeeping, when you find you just, don't feel like you have time for it anymore, you'd rather be spending that time on revenue generating activities like finding another deal or analyzing properties, things like that, then I would highly recommend hiring a real estate specific bookkeeper. There are so many nuances with real estate that maybe a generalist bookkeeper tends to make mistakes on, like booking closing statements, hard money loans, mortgage escrow, earnest money deposits, things like that. Real estate has many different little quirks that you really want to make sure that your bookkeeper understands. And you also want to make sure you're working with a bookkeeper who is speaking the same language as your tax CPA. So, accelerated depreciation, all the tax benefits that come with real estate, you want to make sure that your bookkeeper understands those things and can have productive conversations with your tax CPA. Doesn't have to be perfect on day one as a new real estate investor, but setting up the right habits early will help you avoid a massive cleanup down the road. And it will also help you to scale and learn more quickly and in a more cost-effective way.